Hello again, Maverick traders, and welcome out to your currency recap. This is Sanket here, and let's break down today's market price action. It's a Wednesday, November the 15th. Let's get into it. Let's talk about what's really moving the markets. Again, after having a big, massive day in the broader markets. Looking at the currency baskets, let's take a look at the possible setups in the next 24 to 48 hours coming ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis here, this is where we were yesterday. We had a massive move in some of the currencies after the CPI. The Canadian dollar, the US dollar, and the yen were sitting at a -3. And we had the Aussie and the pound and the Kiwi were sitting at a +3. So as you can see, that was a massive day. So usually after any big move, we talk about consolidation and we talk about some sort of pullback that we expect, because again, nothing can really go up in a straight arrow. Things have to sort of take a breather and sort of recollect. So let's see how things have moved. Looking at the news for the day today, overall, it was a flat day. And that's exactly what I had expected. You know, the movement, again, if you take a look at the percentage change, we are up about 2% in the market so far this week. Altogether this month, I mean, this is already halfway through the month, we are up about 7.5%. So this is when we already is hitting the upper band of that move. Can we still go higher? We can absolutely go higher. But we need to take some breather. We need to gather some energy to pick up that momentum. So there was a flat day in the markets, but economic data out of the US remains strong and the PPI below expectations. So this is where I had traders asking this question, you know, what does this really mean for the US interest rate? Because the CPI really slashed the further rate hike bets. So that's why the dollar really fell, and so did the yields. Now today, even though PPI was below expectation, the economic data remains strong. And that's why we did not see a continuation in the movements from yesterday, especially in the yields and in the dollar. Yields rally a little bit today to cover some grounds, and even the dollar is strengthened after that report. So something to consider. Now looking at the percentage change. Now taking a look at the big move today, that was the British pound and the Japanese yen. So why these two currencies? So yen has been in a free fall. We talk about how aside from the big move in the dollar, yen has been the more consistent move to the downside. Now, the British pound took a hit after weaker CPI numbers. Remember, just a few months ago, British pound, the CPI out of the UK was running hot, and that was concerning for Bank of England. And in the past couple of meetings, you know, those things have sort of subsided a little bit. So the number were below expectation, and pound did fall on that news. We also noticed that the Swiss franc did strengthen a little bit after being neutral for most of the day yesterday. The euro had a slight pullback. You can see outside of that, it was small movements in the CAD and the Aussie. Kiwi continues to outperform, so something we can take a look at. Some of the Kiwi pairs, but everything else sort of in less than 0.5% range, which is again a small move. But yesterday was the day that we had the massive moves. Now looking at the equities and broader markets, what do you see? The S&P again, flat loose, slightly higher. So is the World Stock Index. Crypto did reverse yesterday's losses, up 3.55%, but gold slight down, and we have the oil markets down 2.11%. Now let's take a look at the crypto markets. So Bitcoin again did the best, followed by the Bitcoin Cash, Ethereum, and Litecoin. So overall, the crypto markets, especially the Bitcoin, remains the strongest out there. Now let's jump into the markets. Our outlook again remains at a +2. Looking at the chart, what do you see? You see that the markets were really bearish, and just in the last 2 weeks, we have gone from looking pretty bearish to now looking very bullish. We still haven't turned the moving averages, so we're still sitting at a +2. What do you see from today's candle? It was a weak candle, as you can see. We did try to run higher and then ended up closing lower. So what does that mean? Market looks exhausted. We are running into some of the overhead resistance. And like I said, we are up against a pretty strong gain so far in the first 2 weeks. I expect the prices to cool down a little bit or maybe go sideways. That's what we expect, either a pullback or a sideways. But at this point, it does look like market looks tired a little bit. Now, looking at the schedule, so we had a lot already so far this week. We only have a couple more things tomorrow. We have the unemployment claims and we have the UK retail sales. But outside of that, again, we have the Australian employment report tonight as well. So I think this probably could move the Aussie, especially after having a nice day yesterday. Aussie can really sort of pull back or give back some of his gain from yesterday or strengthen further. We'll see. But outside of that, again, the US data is already out and nothing really more to focus on. So I think next 24 to 48 hours, we could expect the markets to just continue or sort of pull back or go sideways. Now, looking at the velocity score. So let's take a look at where we are right now. So we have seen the British pound has joined the yen as a -3. Both were really weak today. Something to take a look at. A lot of these yen crosses are actually moving nicely on the daily chart. Outside of that, the Aussie and the Kiwi again remain strong, but I think they are prone to some sort of pullback, especially the Aussie employment report. If that comes out a little weaker, I wouldn't be surprised if the Aussie and the Kiwi sort of pull back a little bit. I mean, take a look at the percentage gains for the week. I mean, all of these things are sitting at the upper end of the range. So usually this is where risk to reward looks sort of weak. Unless it goes sideways or have a pullback, maybe there's an opportunity there. I'm not really looking to chase any of the movements here. The Canadian dollar did get better. Again, dollar sitting at a -2, but the Canadian dollar did sort of recover a little bit. So we'll take a look at some of these currencies, especially the dollar and the CAD. Things that were breaking down yesterday. Let's see how they're looking on the chart. And some of the European currencies, again, Euro and the Swiss franc say sideways. But I think we can, aside from the yen crosses, perhaps we can take a look at some of the British pound crosses. So let's get into it and let's take a look at possible setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with the US dollar currency basket. You can see that we had a massive move yesterday. We broke that support. And then you can see today we just tried to reclaim some of the ground. But again, we are still looking pretty weak in the US dollar. But let's take a look at what the bond yields are doing. Remember, the bond yields are what guiding the US dollar. So take a look at that. The bond yields had a much stronger day today compared to the US. So let's take a look at the 4-hour chart, or let's even take a look at the hourly chart. This was a massive move yesterday. We went sideways for a bit, and after the US data this morning, you can see we strengthened up a little bit. The US dollar did not have the same price action, but I mean, we went more consolidation on the sideways. So personally, I think I'm not a big fan of jumping on the dollar short here. I would rather see this consolidate a little bit. But based on what the bond market is showing us, I think the dollar can go sideways to a little bit higher in the next 24 hours. Now, on the other hand, look at yen. And this is why we talked about, relatively speaking, I know everybody wants to short the dollar, but look at yen. No rally whatsoever, just falling apart. Take a look at this break that we had, and we are just in a free fall here. This is a weekly chart. You can see this is the price action is getting in this oversold territory, but we can actually stay in this level until we can put a meaningful sort of rally from here. So yen is what's really running here. And if you take a look at the dollar yen, let's pull up the dollar yen currency pair, and you'll notice that the dollar yen has recovered a lot of his ground that he gave yesterday. And this is why I don't really love the dollar short here. I know the CPI is already out, the big moves already happened. Let's take a look at what's ahead. And when I take a look at dollar yen, it doesn't really give me that same analysis to go short all over, short the dollar crosses. And I want to compare this to last year because I know a lot of traders were looking at this last year and making same comparisons. Remember last year, let's go back to November last year. We had a weak CPI in November, and you can see that dollar yen really took a dive on that. And after that, it was just continued to move lower and lower. So we almost went from 150 down to 131 in just a short 2-period month. Now, if you take a look at fast forward now, are we seeing the same thing now? And I think the answer is no. We are not seeing the same thing. We almost recovered quite a bit of these things. So I personally think that the dollar is not the best bet here to the short side. We perhaps take a look at some of the yen crosses and elsewhere, even the British pound. Let's pull up the British pound basket and let's go out in the chart here. So you can see the British pound chart has been the best outperformer since last year. I mean, 2023, you can see massive move across the board. At this point, we did ran up into this prior support, which is now the resistance, and we bounced off pretty hard off that level. I think at this point, if you start to go down the time frame here, I think the momentum is sort of over here. We probably see a little bit bear rally, and we want to shorter to that. I like British pound here to the short side more than to the long side. But if you take a look at the counterparts like the euro is still looking strong. So perhaps the pair that I was looking at today was the euro pound. Again, these are slow moving pairs, but remember, this is where you're focusing on relative strength and weakness. Look at the setup that we are in right now. We have a nice resistance right above this 87.40, 87.50 area. If we can get above that, I think we can catch a rally up to the 88.58 area. Again, these are slow moving pairs, but I'm liking more euro long over the British pound. Now, take a look at the Australian dollar and Kiwi as well. I mean, this thing hit a pretty good resistance here, and you can see it backed off. So tonight we have the Aussie employment report. So either one of the two things is going to happen. Either we'll see this break lower, which means we want to be long the Kiwi and short the Aussie. But if we try to get above this area, then again, that would indicate us that the Aussie wants to strengthen further. Again, it could go either way. Remember, when you play these news announcements, you're pretty much trying to decide which way it's going to go, and it could go either way. So we can take a look at currency pairs like pound Aussie. Let's say if the Aussie do weaken, or let's say Aussie do strengthen, take a look at that. What we got a nice support on the daily chart on pound Aussie. That's about 189.49 or 89.50. We're sitting at about 90.72, about 120 pips there. But this is, again, something I'm paying close attention to going into next week. Because if we break this level, I think we can start a bit more to the downside, as this is a long consolidation lasting for the last 2 months. If it does break that, I think we have a nice trade on hand over here, especially on a longer term time frame. We can also take a look at pound against the Kiwi. And again, if that continues, I think we can see a break below this area as well. So the question is, again, that's a British pound weakness. Let's take a look at British pound against the other currency pairs, like, again, British pound against the dollar. You can see that we did recover some of the grounds that it gained yesterday. But let's take a look at other pairs. A lot of the dollar crosses, you can see they're sitting right up at the range again. If the Aussie weakened tonight, I don't mind taking a look at the Aussie dollar, but I just want to highlight that a lot of these dollar crosses are sitting at the upper end of the range, but the way we closed today, it was not a bullish close. So again, that's telling me that in the next 24 hours, we could see a slight pullback in some of the dollar crosses. We don't have a breakout yet. Take a look at the Kiwi dollar, same thing. So Aussie and Kiwi, they're all at that range of resistance. So if we don't have a confirmed breakout yet, I mean, we did have some rallies in the euro dollar, but you can see they all sort of get back some of the gains as well. We have the USD CAD, and that's again range bound as well. So let's shift our gear and focus on some of the yen crosses. and we looked at, let's take a look at another currency basket, the Canadian dollar. So the Canadian dollar, along with the USD, you can see it just recovered some of the grounds here. I'm closely watching this area because this is the prior support and now the resistance. Either this is going to be a selling opportunity or it's going to recover and back up that level here. But we can take a look at some of these yen crosses. Now, taking a look at Aussie yen, you can see right up again resistance. We have a nice breakout. Euro yen, wow, look at that. After that big run, 160, sitting at 164. So I know a lot of traders will say, well, this thing is already ran up. Well, I think if the CAD strengthen, we can perhaps take a look at a breakout in the CAD yen. Look at Swiss franc yen that's been running. I mean, pound yen is mostly flat. Taking a look at the Kiwi yen that's running. So a lot of the yen crosses are running. Again, if we think that the Aussie and the Kiwi is going to take a little break, I think the dollar yen seems to be the obvious choice for me, especially if the dollar sort of regain it a little bit. I think that this can easily get back towards that 150, 180 one area. Outside of that, I'll be taking a look at Aussie employment report tonight. And again, taking a look at Aussie Kiwi. I think this could be a decent pair to jump on as well. And if Aussie strengthen, pound Aussie will be the one that I will be also considering as well. If Aussie weakens, then perhaps I can take a look at Aussie against the Kiwi. But that's the game plan for the upcoming 24 hours. Again, we already had big move. This week has been a great week, and I know a lot of traders have done really well. So good job. But this is where your next job is to hold on to the gains. That's the second part of this game. Making money is great. Holding on to it is even more important. So I'm expecting consolidations to pull back. Keep your expectation in line. We're not expecting a blockbuster move here. We're expecting some sort of a 0.5% move here and there. So that's what we'll be looking at Aussie employment report tonight. Outside of that, focus on relative center weakness. Don't chase any moves. Let the price action settle down. Let the market sort of gather some energy and look for the next move ahead. Thanks for joining. We'll see you in the next update. Cheers.